down. We're going down. No brakes, no savior. Fed can't fix this crash it major. Grab your shovel, dig your grave, 'cause attendees turn to dust. Today we're going down. Maxed out margin, lit the wick. Now I got my broker on my dick. Said hedge your bets, but I said nah. Now I'm knee deep in fucking margin calls. Took my rent, took my ride, took my future, took my pride. Now I'm staring at the screen like a junkie chasing dopamine. They built a house of cards and called it gold, but the hands that hold the strings just let it go. A million bag holders screaming please just bounce, but the floor is lava now, we're headed straight down. We're going down. No brakes, no savior. Fed can't fix this crash it major. Grab your shovel, dig your grave, 'cause attendees turn to dust. Today we're going down. We're going down. No brakes, no savior. Fed can't fix this crash it major. Grab your shovel, dig your grave, 'cause attendees turn to dust. Today we're going down. We're going down. Down, down, down.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning. We're back at it again with another episode of Fat Barney losing all of his money in the stock market. I hope you guys are ready for a good one. Today is what? Wednesday the 20th, I want to say. I think it's Wednesday the 20th. I think, at least. We're about to find out. But I'm kind of excited for today. And obviously, first of all, a little bit of my apologies here because I know I'm a little bit late, but that's also all just 100% my fault. I got a little bit too deep into fixing some of the code that I have rocking right now, and actually ChatGPT is doing one final logic check for me, and I'm hoping, all right, it's producing, it's working. All right, we're going to copy that. Where the fuck is my code? Now I lost my code. Yeah, no, I completely lost track of time, and I was trying to honestly make an entire new strategy that for whatever reason I called runner. I don't really have that good of a reason of why I called it runner. I honestly haven't even done extensive back testing on this one. I've just been ripping it up. I had this idea last night, and then I started it. I looked at it this morning and I thought to myself, what in the world were you doing? That's not going to work at all. But now I think it might work. I don't know. Okay. My question is this for all of you guys. Should we just run it today? Should we just run the strategy? I can tell you, honestly, I don't know if it's going to work. There's definitely been no back testing. There's definitely been no robustness testing. There's definitely been no seasonality testing. Honestly, I don't even know if it's going to work. Like, literally, ChatGPT just finished my own sanity check. I could buy an extra account on Tradeify this morning and let it rip. I could do... I feel like I should do it. I feel like maybe... I feel like I should. Because, like, if we get some big moves today, this should work pretty well, I think. It's a tough one. I know you guys are always going to, like, be like, yeah, just do it, dude. Like, I know you guys are going to bully me into it. But, like, financially, that's not smart. But if it works, how cool would that be? Like, you'd be like, wow, this guy fat Barney does it again, like I get that it's high risk, low reward, but the fact that there's even a shot for some reward makes me kind of want to do it. It really, really does. It really, 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 really does. Run it on half. That's an idea. But hear me out. What if I run it on double? Just because I am a deep believer in beginner's luck. And what if this is my day to take advantage of beginner's luck, being the system is, I can't even say brand new. It's like a zygote. I don't even know if it's a zygote right now. It's like there's nothing been done with this one. Nothing has been tested with this one. All right, I think I'm going to do it. And you know what? On that particular note, I am buying a Tradeify account, so we might as well make them. We'll give them a little bit of love today. Where's it? Tradeify. I believe it's Tradeify. Hang on, let me log into my account. What kind of a discount are they running right now? It's either 30 or 35% off, 30% off. So if you want to go straight to funded, I'm going to run this on account, like not an eval, like an actual, I guess what would be the proper term, a proper challenge? No, eval challenge performance account, I guess is the right one. So they do allow you to go straight to funded. So that's what I'm going to do. And you know what? Just to show them a little bit of love here, 30% off with the code Goonie. All right, we're going to save that. And let me pin this to the top of chat for all of you guys if you want to check it out. But I just bought mine. Unfortunately, they don't let you use your own code. Will this even work? Does that link work if you click on it? Maybe not. It does appear to work. Okay, yeah. So you can get 30% off. It's called a lightning funded. It's instant funding. There's no eval stage. There's no challenge stage. It's right to funded. And if you use that code Goonie, obviously you'll get that 30% off. And we're going to see if I could get lucky today. Let me pin that to the top of both chats. And then hopefully this will work well enough to ideally pay for payday Friday, which I have about 2 days to figure this one out. All right, we're going to do that. All right, it is pinned all over. If you're interested in Tradeify and going straight to funded, it's there. Dude, I'm looking at this code right now, and as I'm awkwardly trying to introduce the show to you guys, I think I see a bug. Is that going to be an edge case bug? Think, Matthew. They expected more. I don't know. I think it's a bug. Let me fix one line of code, and I'm hoping that this rocks it today. I'm really hoping that this rocks it today. So I guess before we get into that, I'm more than happy to give you the details and whatnot. But let me switch things up to get you guys properly prepared for today. S&P 500 futures slip as investors weigh retail earnings await the Fed minutes. So yes, we heard from Target this morning, not so good. In fact, the last time I looked at it, it was down 9 or 10%, dragging Walmart with it. Lowe's was up slightly. Those were some of the reports of the morning. Obviously, you have Walmart reporting tomorrow, and yes, those are important. I would argue the most important earnings report we still have to hear from is NVIDIA, which is mid next week. But between now and then, arguably the most impactful thing is going to be this Friday, 10 a.m. Eastern, 30 minutes into the trading day. We're going to hear about a 10 to 15-minute speech from Jerome Powell, chairman of the Fed, at the Jackson Hole Symposium. And everyone wants to know what in the world is going on with Fed rate cuts. We have a pretty high odds chance statistically of a 25 bips rate cut in September. The question is what's going to be going down for the remainder of the year. By the end of the year, are we going to be in one extreme situation of 100 bips cumulatively, or is it going to be a baby thing of only 25, maybe only 50? So right now, the market is very much antsy in its pantsy, trying to figure out what are the rate cuts going to be by the end of the year. How much? Right? Anywhere from 25 to 100 bips is seemingly in play right now. And at one point in time, circa this time last week, when we only had the CPI report, everyone's like, oh, no, there's actually a shot of 100 bips. We're looking good. Thumbs up, brother. And then Thursday of last week before the market opened, we got the PPI report that came in way higher than expected. And then that sent us the other way where we're like, actually, is it only going to be 25 bips? So we're in a really, really confusing in between. And that happens to be piled on with the craziness of Russia and Ukraine and Alaska and Europe. And then also early this morning, we're hearing that Israel is gearing up to send more people into Gaza to apparently officially take out Hamas. So there is some things are getting a little spicy. And not only can we feel that by just seeing the market take a decent size hit yesterday, but we could also see it in the measurable increase in vol across the board for today and really specifically going into Friday. Vol is now higher. So I did cover this in the update video, so shout out to everyone who watched that. But you guys already know we saw a decent amount of profit taking and then a little bit of extreme protection purchasing. So calls were most likely locked in and profits taken off the table, not only in the options market, but also we saw that in the equities market with some of these large players being net aggressive sellers, most likely once again locking in profits. And then we did see some protections being bought, as in long puts being purchased just in case sometime between now and I guess a week out, we see a bit of an extreme sell-off. So once again, that it's not panic mode. I want to be very clear here. What we're seeing from a measurable standpoint, from an empirical standpoint, it's a little bit of protection being purchased, but we're not in that full-on panic mode at this moment in time. Of course, things can change on a moment's notice. It might change today, tomorrow, Friday. It might not change at all. It could also change in a better way where maybe Powell comes on the stage on Friday and he's like, no, I'm actually feeling real good about rate cuts. And then the market takes a crazy V-shaped recovery and we explode to new all-time highs. But of course, there's a non-0% chance that between now, today, and tomorrow, Powell says something like, actually, we're getting some data that really suggests we're going to stay where we're at. And then all of a sudden, we're going to be begging for 25 bips by the end of the year, and the market takes a clear hit. So right now, I just want to make it clear, we're in like kind of the starting of frothy times, and I wish I could tell you which way it's going to break, but in reality, which way we're going to break is going to be depending on data that I don't know what it's going to be. I don't know what Powell's going to say on Friday, so very important to pay attention to that. Also, not to belittle some of the other things going on, Putin calls Zelensky the West's illegitimate puppet. Can he talk peace with him? So apparently, I don't know if this is necessarily the best way to start off peace negotiations by calling someone an illegitimate puppet, but it's a bold move, Cotton. We're going to wait around and see how that one plays out. Another one situation that's making the overall situation a bit more spicy. Israel to call up 60,000 reservists for Gaza City invasion. The announcement comes as most Israelis want the war to end in a deal that will free the remaining hostages held by Hamas. So we're at the point where not too long ago, even in the U.S., people kind of got tired of this. And now it seems like people even in Israel are getting tired of this, even though the government sees it fit to call up 60,000 reservists. So hopefully both of these situations blow over very quickly in a very positive manner. But obviously, it's important for me to bring these things up to you because they could easily balloon out of control and have a negative impact. So obviously, hoping for the best, but preparing for the worst. What's definitely going to have an impact is what we have coming down the pipeline for the remainder of the week. So I do need you to know, with respect to today at 2 p.m. in the afternoon, we are getting the FOMC meeting minutes. This is not an FOMC meeting. This is the FOMC meeting minutes, as in the details of the last meeting, where we get more of a very specific look and insight into what was discussed in the last meeting. This is not a new FOMC meeting, but those meeting minutes do come out today. Tomorrow, we're going to get the normal initial jobless claims, some manufacturing numbers, and some PMI numbers. And then the big show is going to be Friday, once again, 10 a.m. Of course, that's 2 to 3 days out, depending on how you want to count it. But obviously, I will be streaming that because that's going to be very, very important. Powell's global peers to cheer for Fed to rebuke to Trump. So we're kind of in this in between where politically Trump is very much spun up that they should cut rates, and all of his hardcore followers, without really knowing much about the economy or monetary policy, by the exclusive fact that Trump is saying they should cut rates, many of his followers think, oh yeah, we should cut rates and we should cut it by 300 bips. I haven't heard a single argument from anyone at all, whether informed or not informed, that we should get a 300 bips rate cut. I think the entire whatever establishment, the economy, Wall Street, everyone knows that 300 bips would be crazy. I think there's somewhat of an argument for 25 bips, and maybe we should speed it up a little bit faster to 50 bips, depending on how some of the data coming in this week and next week looks. But this idea of 300 bips is kind of crazy. I also think it's very uncouth, if you will, for the sitting president to be attacking a non-political position. Ideally, the Fed chair is non-political. It's very quickly going to be political when you keep referring to him as a moron, regardless of your job. No one likes to be called a moron by the president. So we are in interesting times, and that's part of, I guess, really the narrative and the drama leading into this Friday of what is he going to say. Central bankers are gathering in Jackson Hole, Wyoming to defend Jerome Powell against relentless attacks from the President Donald Trump for refusing to cut interest rates. I want to make it very clear that up until the last meeting, every single vote of the voting members, all of them, it's not just that Powell wants something to happen. It's really a little mini democracy. Up until the last meeting, they all voted that, hey, unanimously on all the rate hikes, flat, a little bit of a cut. But up until then, up until the recent one, there's been no dissenting voices. So this idea of get Jerome Powell out, just so you guys know, if Jerome Powell were kicked out, if he were not there, we would still be exactly where we're at. We would be exactly where we're at. I'm even seeing this, like over here in chat, Powell is a moron. Based on what? Like, what information do you actually have to say he's a moron besides, like, beyond the fact that you're just regurgitating what President Trump said? Like, seriously. Like, what measurable information do you have? What knowledge of monetary policy models do you have that truly suggests he's a moron and he's been playing the situation wrong? I find it so interesting that we live in such a polarized age that we get comments like this where people are just like, nope, I heard this, so I got to regurgitate it, where you're not doing your own thinking. You're not doing your own research. You're like literally just regurgitating, which, like, I suppose is what we almost see toddlers do. So maybe that's why I'm like surprised about the whole situation is we're seeing grown adults revert to their child-esque tendencies rather than being an adult and developing their own form of critical thought. If you are more than welcome to disagree with Powell's actions, but if you don't know why you're disagreeing with him, it means you're just someone else's puppet. It means you've done no research on this whatsoever. At this point, I just want to make it very clear. If Powell had his position or if he did not, due to the recent voting record of all the voting FOMC members, the U.S. Fed fund rate would be at the exact same level we are right now. It's not like he was the one vote that broke it one way or the other way. They've all been unanimous, excluding the last vote where there was only 2 dissenting voices. So there was still an overwhelming majority that we were going to stay at 4.25%. So I guess if you're going to be mad at Powell, you should also be mad at every other member of the Fed. At least at that point, you would be logically consistent with the situation. I would respect your viewpoint a little bit more. But for right now, I think there's a giant misunderstanding that Powell himself gets to decide what the Fed fund rate is, and that's honestly just not true. And if you're wondering, well, okay, like, why is Trump so spun up about this particular issue? I know he says that it's costing taxpayers a lot of money, but in reality, he has his own personal net wealth bet on the fact that rates are going to come down. So of course he wants rates cuts because he individually will profit from it. Trump embarks on a $104 million bond buying spree while in office. Once again, maybe President Trump truly does think this is the proper monetary policy for like the Fed to cut rates, but I'm also letting you know that in the event that rates get cut, he will individually financially benefit. I want to make that very clear. They're not necessarily mutually exclusive. He might take this bet on because he thinks it's the appropriate process, and that's completely fair. Or maybe he's pressuring the Fed to do it because it's more of like the chicken or the egg. Like which one's gonna come first here? And maybe he did this bet because he thinks it's the appropriate thing, or maybe he's pressuring them to do this because once again, he individually benefits. President Donald Trump has bought hundreds of bonds since he returned to office, including those sold by U.S. companies affected by federal policy changes he championed. The bonds, which total at least $104 million, include municipal bonds and corporate debt from companies such as Qualcomm, Home Depot, and Meta Platforms. The investments are part of Trump's continued pursuit of wealth accumulation while in office, with his net worth pegged at $6.4 billion. So, a politician is a politician. They're obviously going to use their influence and their power and their position and their insider knowledge to make money. And unfortunately, it seems based on this particular article that the current sitting president he's no different here. Absolutely no different. But in all reality, I'm not that surprised. All right. Speaking of individual companies, Home Depot reporting yesterday, that is one that Trump did buy some of their debt. Early this morning, we heard from Target. It did not go well. And then, in fact, it was actually so bad that it kind of brought down Walmart with it. But the one that is doing somewhat decent, at least the last time I checked at it, was Lowe's. And they also recently reported. So let's get a little bit into Target. Target shares tumble as retailer picks new CEO, says sales fell again. Not looking good. Target names longtime insider Michael Fidike. I don't know how the fuck to say that one. Its next CEO as retailer tries to break sales and stock slump. So the numbers were not good. The fact that the stock's down, maybe it's a vote of no confidence in this guy. Maybe just the numbers themselves were so bad that that's where we should naturally be at. But anyway, that's why Target's not looking so good. What is looking a bit better, Lowe's beats on quarterly earnings buys Home Pro's business for $8.8 billion. Honestly, I didn't know Lowe's was at that size to be throwing around those chunks of change, but Jesus. More crap headlines. But wait, why is it a crap headline if it's true? That's what I don't get. You guys are all so spun up right there, especially on Rumble Chat, who you cannot handle one negative thought at all about the guy you voted for, which really does come back to, do you think you're thinking for yourself? Like, really? It's a crap headline? Or maybe it's just true. You realize all these things are publicly reported, right? It's not like Bloomberg just made it up out of the thin air. Like, you can go see the filings yourself. Like, it is publicly available information. And you're like, no, that's not real just because I don't want it to be real. It's not real. No, I just don't buy it. Like, dude, just be your own person, man. Holy shit, this lack of it's scary. Like, the fact that these are adults, like, that's actually a scary, scary thing. Folks, if you want to not trust me, then just go do your own research and you have your opportunity to disprove me. Be like, go find a piece of evidence that proves that I'm wrong. Screaming that I'm wrong and I have Trump derangement syndrome just because you don't like the headline doesn't make you right. In fact, by definition, it makes you a retard. Walmart shrimp may have been exposed to radioactive material. I'm starting to get a sneaky suspicion of the types of people who might have been eating the radioactive shrimp from Walmart. I'm really starting to find the particular subset of the internet that may have consumed this. So if you have, and I'm getting a strong suspicion of who it was, you might want to go see your doctor. You might want to go see your doctor about it. Jesus. Robinhood launches NFL and college football prediction market. So even though Robinhood recently had its earnings, it is continuing to add on to the suite of things that they offer all their users. And obviously with the NFL season about to kick off, and NFL and college really, this is another thing. Like it might play out really, really well for them. So I'm curious to see how this is going to go. All right, so that's it for the overall situation. That's it for individual equities. Of course, a lot of this information I give out for free, mattkohrs.locals.com. It's 100% free. I break down what's going on in the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events, and then probably the most useful is the seasonality. Today's seasonality is nothing that special. it's leaning bullish, it's leaning bearish for quite a few years. The first 10 years out of this 27-year test, it was just flat. And then there was a clear hit. Recently, there's been a little bit of a pop, but overall, it's still kind of net down. But since the recent pop was there, it's not bearish. It's just leaning bearish. Just so you know, tomorrow, Thursday, much more neutral. And then Friday, neutral, but recently it did start to sell off. So once again, this is 100% free. It's a newsletter, comes to your email inbox every single Sunday morning. So feel free to sign up for that. I never charge for it. I never have, and I never will. It's just some information that hopefully makes you a little bit more informed in the upcoming trading week. Speaking of being informed, here's the overall situation on the S&P 500. We now have a little bit of a mini series of lower highs and lower lows. So on the daily chart, that is a mini bear trend, a mini bear pullback, and an overall bullish trend. The overall trend is clearly up. Recently, a little bit of bearishness, and you're going to see the same thing in the NASDAQ as well. Overall trend is bullish. Recent week or so is lower highs and lower lows. Specific to today, these are all the key levels I'm watching. As I always do, I map out the previous highs, lows, and closing value, and then the dash lines are the high and the low from 2 sessions ago. The white box is the transition zone with relation to the 0 DDE, gamma, and delta, and then the yellow lines are the major open interest levels. If we were to open right now, we would be at 6406, which puts us just slightly in the red relative to yesterday's close, but also smack dab in the middle of this transition zone. So I'll be either waiting for the breakdown of 6397, and then my first target would be 6385, or I'm looking for the recapture of really going from red to green, and then maybe push a 6425. Those would be my first levels out of the gate. Obviously, these are my other levels for the remainder of the day. Feel free to screenshot it. Feel free to do whatever you want. But I don't think I enabled my strategies today. Let me make sure all my strategies are on, so I don't have those same issues I did yesterday. I don't want to miss the market open here. I don't want to miss the market open. All right. I think we're looking good. I just wanted to show you this. I did just in the nick of time get this brand new account. Shout out to Tradefar. They are pinned to the top of chat. It's in the description of the video. This is the account I literally just bought this morning. It is not an eval account. It is not a challenge account. It is a legit funded account. They have lightning funding, basically instant funding, and that's what I'm going to be running this brand new strategy on. I think my fat head is already blocking it, but right here, runner, brand new system. I had the idea last night, tried to write the code, looked like shit this morning, tried to rewrite it, and now we're just ripping it live. Now we are just ripping it live. So we're going to see how it plays out today, folks. We are definitely going to see how this one plays out today. So I'm going to be running the normal strategies that you guys have seen recently on the 25 accounts I already had, but then we just added in a 26th account today with a brand new system, and ideally it works out. Ding, 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 ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, we got a little bit of a push to the upside, and now we are almost seemingly rapidly selling off. Well, that was fast.
Order filled.
Bada bing, bada boom. So the normal strategies that you guys have already been seeing, basically that first strategy that fires, that one was a pretty obvious one. It just snapped VWAP, and it was a VWAP momentum trade. So it just took that right there, right here. Like literally this white dash line. I can't believe I'm actually giving away some of my strategies, but that one was basically the first test of VWAP on the day based on a little bit of pre-market analysis. Is it an opportunity to revert off of that, or isn't it an opportunity to play through it? That one was a short trade right through VWAP, just so everyone knows. That was a short trade right through VWAP, right there. Boom. Short capture, made about $250. Well, $200, I guess a little bit of slippage on these Apex accounts. So once again, I do like to call it out. Sometimes slippage hurts me. Sometimes it does help me. Today appears to be one of those days that it did help me. So, hey, I'll take it. I think it's mentally healthy to recognize the times that it does assist you versus always complaining about the times that it exclusively hurts you. So there we have it. One trade of the day. The other ones are going to take a little bit of time. It just needs to process a bit more data. We are already pushing this key level of 6,400, key technical level, key psychological level. It's where we closed yesterday. Huge open interest level. Obviously, the fact that it's just 100 rung means this is important, and it's pretty much the bottom of our transition zone. If we snap 97, 97.5, I would argue if we're holding here, it really does increase the chances of us pushing to the next support level at 6,385, as I already alluded to before the market opens. Not that this is going to definitively happen, but if this doesn't hold, I'd be then watching 6,370. So these are my next two downside targets. Of course, we could easily revert out of here. My first upside target would be 6,411, and then from there, I'd be watching 6,425. So my first bullish targets, my first bearish targets, and obviously, let's see how things develop throughout the day. That is not the best opening by any means. I'm already getting alerts on Meta and on, where's my Meta? Oh, wow. Meta's getting goosed, folks. I'm getting breakdown alerts on Meta and on Coin early this morning. Not looking the best. It does appear Netflix is trying to hold break even. Meta's down a full percent. Avago's also down 1.4%. So aggression out of the gate. The Qs already took out their low from yesterday. That means we have another low for the sixth trading session in a row. And then the SPY just took out its low from yesterday. So once again, not looking the best. Here's a quick look at options flow as we're waiting for the opening session really to complete. At least want to wait for those first 15, 30 minutes, something like that. So SPY slightly down, and then the Mag 7, if this loads, is also, as of now, granted, we're only 3 minutes into the day, we are slightly down right there. So a little bit of a bearish opening, but the SPY's right at support, so maybe we get a bit of a bounce there. Once again, the support level that we kind of talked about even before the market opened, somewhere in this zone, a slight overshoot of 6,400. We didn't break the transition zone. So let's see if it has enough follow through to get back up to 6,411 and try to go green, or is it just going to be a lower high and we puke below this and then just take a quick dive down to 6,385? Obviously, time will tell. I do want to bring to your attention, the big guys haven't really done much today because we're only 4 minutes into the day, but I do want to let you know that they were aggressively selling all day yesterday. Not necessarily, just because someone's selling doesn't mean that they have to be making a bearish short position. Based on the options market, we're actually seeing just a lot of profits being taken off the table. I think more so, we've had this insane rip for quite a while that a lot of people are just saying, okay, there's a little bit of bearishness, let's lock in. If we bounce, we could always re-enter, but if it ends up being the true sell-off, whatever, we locked in close to the all-time high. So with respect to like risk management and whatnot, it does make sense. It really does make sense taking in some of these absurd profits off the table. So I get in the short term, if you're like me and kind of like day trading and whatnot, it can feel like quite a bit of a panic where you're like, dude, why are we seeing so many red bars? But as I really tried to stress in the update video yesterday, that like when in doubt, zoom out. We're not that far removed from an all-time high. I know people are freaking out and they're already screaming doomsday. And of course, that might be the high and we could easily crash. I shouldn't say easily. Obviously, there's a non-0% chance that could happen, but I don't even think I want to consider that until I see the snap of this trend line, until I see the snap of the 50 EMA, until I see us take out the most recent low. The most recent low was Friday, August the 1st. We haven't even made a fresh low yet, folks. We're still consistently making higher highs and higher lows, which by definition is a bullish trend. Well, it's one way to define a bullish trend. So I think just kind of commenting on some of the commentary I saw in here yesterday, on the update video, what I saw on really Twitter/X, like all that, lots of panic, lots of doomsday type of stuff. And in reality, like why? We're just a couple days away from an all-time high to like start screaming about like a catastrophic crash that we're never going to recover from. I don't know, call me old-fashioned, but that feels a little bit silly if you ask me. A little bit silly. And if it were to happen, well, congrats, you're in here. We're active traders. That means you know how to make money both in the up, down, and sideways direction. It's not like you can only make money as a bull. It's not like you can only make money as a bear. In fact, you can make money not being a bull or a bear, just selling the appropriate premium and being more of a neutral player. As an investor, I understand it might be a little bit more rough, but guess what? As an investor, your time frame is multiple years, if not multiple decades. So like one day's movement shouldn't be freaking you out at all. Like it shouldn't be freaking you at all. Is there a way to send my BTC from Robinhood to public? I'm trying to get off Robinhood altogether. I don't think Robinhood has its own wallet, so no. So technically, you're probably not the actual owner of the Bitcoin. It's probably legally a fancy IOU with Robinhood. The only way you have the Bitcoin yourself, well, that's why we have the saying, not your keys, not your coin, is if it's in your own wallet rather than you bought it on the brokerage, but the brokerage actually bought it and they have like a legal IOU to the ownership of that. So it gets a little bit complicated, but it's actually, Robinhood does have its own wallet, self-custody. Like I said, I wasn't 100% sure. If it has its own wallet, then you should be able to do it. You can send it from one wallet to the other wallet. I don't know because I'm not on Robinhood. But if it does have its own wallet, that's self-custody. Like you have your own keys. So that's kind of the opposite of the saying, not your keys, not your coin. So if there is a wallet on Robinhood and you have access to your own keys, yes, you could send it to whatever wallet you want. But also to clarify, wherever you have it, you should do self-custody. I want to be very clear. In fact, I would say move it to a cold wallet to be protected from like scammers and thieves and that type of stuff. So if I were to purchase it, you could purchase it on whatever exchange you want, on whatever brokerage you want, but I would still highly recommend taking the extra security steps of moving it to a cold wallet storage, just so you do not risk getting hacked or anything like that. And I don't know, put your key phrase or your password or whatever it is, like, I don't know, hide it somewhere deep in your underwear drawer, put it in a safety deposit box, dude, put it somewhere where you think it's safe, or I don't know, maybe have a lawyer hold on to it, maybe make it part of your will, or I don't know what it is. Obviously there's various steps you could take, but I think there's too many people who don't really appreciate the horror stories that other people have gone through when they like blow out in one way or the other. And I think it could just be really, really dangerous. In fact, I know it could be really, really dangerous. All right. I'm a little bit concerned. Oh, the new strategy, by the way, side note, like I know I kind of got you guys all jacked up about the new strategy. It will not be turning on until past 10 a.m. It's not allowed to trade before 10 a.m. I just want everyone to know that. Just not allowed to trade before 10 a.m. Oh, but what I am nervous about. All right. I do think I need to disable this strategy because I don't think it's going to work today. I need to disable this strategy because I don't think that's going to work today. Okay. We're looking good. I've only traded once today. I haven't touched my options account, whether 0DT or swings whatsoever. I'm just kind of waiting. Order submitted. All right. Well, we're actually in a trade right there. It looks like it had enough negative momentum, 1, 2, 3, 4 in a row. So it just took a bearish trade on that, but quickly popped back up to almost my risk level. So let's hope that that doesn't hit. Let's hope that that doesn't hit. The 940 trade. You know, one thing I've noticed about my own strategy, the first momentum, basically on a day trading, scalp trading perspective, many of my strategies specifically relate to momentum and just like a certain barrier. Like, oh, fuck, look how close that was, but I didn't get my fill. Look how freaking close that was. Order filled. I've noticed that it's kind of not really an all or nothing type of a thing. By the way, obviously it hit. But I've noticed it works almost like instantaneously, like boom, I get my money in and out. And you guys have even been here where like, if you're measuring momentum properly or if it's working properly, it's almost as if it's so fast that it's in and out before I even have the time to flip the screen over for us to all see it. And then I've noticed that there's other times where like it hits it and you're almost bottom ticking or like top ticking the day. And then those are the ones that you're like kind of sweating. You're like, oh shit, oh shit, oh shit. And I've noticed like there's not really an in between. It's either absurdly fast or it's like a sweat fest. And you're like, dude, is it going to work? Is it going to work? Is it going to work? Like that type of a thing. And I kind of want to come up with, I don't know. I feel like there has to be a filter or not to help me avoid the the extreme adverse movement ones. And that one wasn't that bad. Obviously, we've all been together when it's been a little bit worse for sure. And like, I'm happy that that worked. But it seems like specifically my first momentum trade of the day sometimes is like a little bit more of a sweat than I want it to be. I take extensive notes and collect an extensive amount of data of all my sub trading strategies of the overall portfolio. And I've noticed that the first one specifically, the one that just fired, it can get, I don't know, a little dicey, if you will. And I don't necessarily want to put it out to the back 40. I don't want to put it on an iceberg and kick it off the shore here because I think it could be salvaged. But there's something about it that I feel like I'm sweating a little bit too much on that first trade with all of you. Well, not the first. It's either going to be the second or the third trade of the day, depending on how things line up. But the early trade of the day. And something about it. Maybe I'm a little too optimistic. I think it could be salvaged, but I did notice. And yesterday was the opposite. Yesterday, it just hit like no other, no issue, no problem, just got the money. No issue whatsoever. Today, I've just noticed that. It's either absurdly good, and I literally don't even have the time to switch back to show you guys the entry because by then it already exited. Or it's like that where it's like, yo, fuck, that's like kind of coming close to your wrist, brother. Like, what are you doing there? Well, what the fuck are you doing there? Cut it after a set number of bars. So if it fails, you are in and out. Just a quick hit. Nope. That's not at all what it's based on. I think that logic is useful for some types of strategies. I do have strategies that just hold for X amount of bars. And like, I think there is a time and a place for that type of mindset, that type of like framework attacking the market for sure. But for that particular momentum strategy, a bar hold wouldn't work. Especially because it fires so quickly, whether hitting its entry or exit, it's a rather quick thing. So even if I did a bar count, I'd probably have to get down to like the 100 tick chart or some shit like that. And I mean, I could always take a look into it, but I have a sneaky suspicion that solution, which is a good solution, honestly, for many strategies, I don't know if it would necessarily apply to that one. I don't know if it would, but I could always take a little looky-see into it. Mag 7, Delta almost at the low of the day. S&P 500 is at the low of the day. And then the NASDAQ is also at the low of the day. So the options market is puking with price, which I wouldn't say price is puking, but definitely lower highs, lower lows. Obviously a bearish open. Momentum-wise, 5-minute, 10-minute, 30-minute, and 4-hour are all bearish. 5-minute, 10-minute, 30-minute, 4-hour are all bearish as well on the NASDAQ. We're seeing a little bit of a breakdown from this trend zone. Oh, do I want to front run Piper early? Do I want to put all of my money on the line without a strategy? Do I just want to do it by gut feel today? Do I want to break my own rules that I tell you guys day in and day out? You should trade with the strategy, and if you're not trading with the strategy, you're stupid, and it's just a matter of time before you blow out, and blah, 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 blah. Hey, man, we all get it. Sometimes people get on their high horse, but I wonder if today is one of those days where I can just break my own fucking rules and see what happens. Is today one of those days? All right, we're going to throw an order out there and see what happens. We're going to throw an order out there. Looks like the 15-minute Orbo just broke to the bottom side. Remember, the Orbo is the opening range breakout or breakdown. So it's whatever that first time period bar of the day is, whether it's the minute, 5-minute, 10-minute, 15, 30, blah, 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 blah. So we just got done with the first 15 minutes of the day, and both the SPY and the Qs broke to the south side. Both broke to the south side. All right, I did place a trade on the day. Remember, vol did expire this morning, which is making the situation a little bit more complicated. I took a stupid trade already, so if you're in the Discord, I'm going to put this in. Like I said, I'm just front running stuff today because I don't know. I don't know. It's just I just want to feel something, you know. No strat, all vibes. All vibes. All right, if you're in the Discord, I just put in a vibes trade, if you will. Just a nice A nice vibes trade. ES might be heading to 6409. NQ already broke that pre-market low. It looks like the next potential support is honestly pretty down low. 23,164. Things are looking a little goosey. Flow alert there apparently didn't help us at all, brother. Oh man, what do we have going on here? Here's a look. Is my fat head blocking this now? We're just here. Let me show you from market open till now what's been happening on the DOM, the depth of market and the active trades, kind of like the trade path. Oh, look at that. Just aggressively hitting the bid. A little bit of a relief, hitting the bid. A little bit of relief, hitting the bid. A little bit of relief, hitting the, like this last one right here, they just annihilated it. Even there was a level of support too, and it filled all of that just before 945, just murdered it. We are below the point of control. We are below VWAP. I'm not even seeing that aggressive of sitting buy orders yet. I would expect to see some down here at 23,250. And of course, they might pop up as we come closer. We're trading at 80, so that's about 30 points away. But if anything, I'm just seeing a lot of selling orders on the top side. Some are growing back up here for some reason, but I'm not seeing the most buy side liquidity support come in below. So this could get interesting. This could definitely get a bit interesting. A wee bit interesting. All right, what else do we have going on here? Yeah, this is puking. Here, I'll move this over. How much of my head is blocking this bottom left one? Is this a bad view? It is a really bad view. When I switch to this one, it feels as if I should be over here. But then when I switch to this one on days that we're selling off, it feels like I should be over here. So that's a conundrum and a half. I mean, I thought we'd wake up today with a conundrum. This is a full conundrum and a half, if you will. Thus far, my normal Icarus strategies, Icarus, the portfolio of strategies I'm currently running, have traded twice. It looks like I'm up anywhere, I don't know. These numbers are usually the correct numbers. It looks like I'm up 360 per account. Slippage has helped me on some of the accounts. It's hurt me on a couple of the other accounts, but up about somewhere in the mid 300s. 2 trades thus far on the day. Icarus is allowed to trade quite a bit more. Remember when I was telling you I got like all pissed off on Friday when things didn't go well, so I kind of made Icarus trade a lot more. I just lowered the requirements for Icarus to rip it, and so even though we're trading only 2 times, like this could really get going today. It could really get going today. So we'll see. And then the newest one, which I just called, this one is not a whole portfolio of strategies right here. This one that I've highlighted that hasn't traded yet. It's not like a whole portfolio. It's just a brand new strategy that I concocted last night. It's called Runner. And it has not traded yet today. So this one has not made its public debut. So the third trade of the day just fired. I'm up about 460 per account. So thus far, looking. Oh, right there. That's a great example. You see what I mean when I say when it's working well, it's so quick. It's in, it's out, it takes its money. And then the ones that are a little bit more sketchy, it's like, yo, fuck, it's still in. Like, what's going on? So that was actually. Just compare the last 2 trades. If you're just joining right now and you want to know what the fuck I'm talking about, go look at what happened in the last 2 trades, and you're going to see just a clear difference. And I'm trying to like rack my brain for what that difference could be, of like why sometimes it's so incredibly fast and then other times it takes forever. And there's seemingly no middle ground. No middle ground. We're like, yeah, like took a sector and 2, but like no big deal. It feels either stupidly fast or not. So I don't know. That's the recent math problem that I'm trying to figure out. But by all definition, this is a bearish open. Price structure, lower highs and lower lows. Price momentum, we are below all the major EMAs on the S&P 500 and on the NASDAQ. We actually hit my first target and we are going to my second target. So that was a reasonable place to scale out. And now we are kind of setting up for maybe a potential additional one right here at 6,370. So that would be my next level, followed by 6,350. I would just follow my bearish targets, scaling out, and then maybe by the time you scale out, you leave on a runner just in case something crazy happens. and then you move on with your life. But then even looking at what's above me over here, that's a lot of red today, folks. That's a lot of red. Holy shit, stuff is breaking down. It is a vomit. It is a vomit. It is a vomit. The tough thing about this is the vomit pretty much started at like 9:39. So if you're a person who doesn't trade in the first 10, 15, 30 minutes, you kind of missed it. I don't know about you guys, but for me, if I want to take a nice short position, I almost have to like wait for some sort of reasonable bounce, and then that bounce fails, and then I can actually get the short position. I don't know if, yeah, like unless you like if you caught this today, congrats to you. Obviously, you traded quite early, but for me, to take like a daily swing position, it's kind of too early in the session and we already puked. So for me to actually get short, like I kind of need something in here. I need something in here. But we'll see. We'll see. What in the world? Why am I getting these alerts? Okay. We'll see how that goes. But look at this waterfall. Meta puking, Broadcom puking, Palantir puking, MSTR puking, Coin puking, NVIDIA puking, Tesla puking, Netflix puking, Meta puking, Apple was puking, Microsoft was trying to fight, trying to buck the trend, but now puking, Rumble puking, Robinhood puking, DJ. What? Can anyone name something not puking? Pop quiz. And also just so we can look at maybe something a little bit exciting. Maybe vol. All right. The one thing not puking is volatility. Picking up and up and up. Calls on puts, partner. VIX. Yeah. All right. VIX just ripping like no other right now. That's crazy. What a day we have, folks. What a freaking day this is already turning out to be. Runner, the newest strategy. This one right here is not allowed till trade to 10 a.m. I just bought this account this morning, and it already starts out as a performance account. There's no challenge, there's no eval, and if that's something that you're interested in, you can check it out. This one's from Tradeify, which is a pretty solid option if you're interested in going like skipping the evals. Tradeify, check it out. It's pinned to the top of chat. As always, use that code Goonie. Goonie will get you the 30% off. But right here, Lightning funded, basically it's instant funding. If you want to, you could still do the growth and the advanced, two different types of challenges, of course, if that's what you want. But if you want to skip right to funded, and I know there's a little bit of a sticker shock, but don't forget when you add on the code Goonie, Goonie, once again, Goonie, you're going to get that additional discount. But yeah. No challenge, no eval. You could go straight to funding, and that's exactly what I am doing on this account, which has not traded yet today. So I have currently 26 accounts. I have 20 Apex accounts, 5 Take Profit accounts, 1 Tradeify account. The Tradeify account is brand new. The other accounts are, what are they, 3 days old? I want to say. I think they're 3 days old, I believe. But I don't know. Anyway, this one's brand new, and running a brand new strategy called Runner on it, and I kind of wish it fired early this morning, because then I would have been able to catch this whole thing. But you know, coulda, shoulda, woulda, brother. Coulda, shoulda, woulda. That one turns on at 10 a.m., so it's allowed to trade within 5 minutes, but it doesn't necessarily have to trade within 5 minutes. So I don't really want to rush anything. If you're in the Discord, you know that I already sold a little bit of premium, which is actually already looking pretty decent on the day. I've traded 3 times on all these first 25 accounts. So 3 trades there, locked in about $450 per account. So that's not bad at all. Not going to complain about that at all. But what I'm waiting for is the change of the hour. We have recently been seeing some reversals at 10 a.m. I'm really, really wondering if we're going to see that. Dude, the NASDAQ is just taking out all these support levels. That's not good. Jesus, we just keep ripping through it. That can't be good. ES is also taking out its levels. It's just ripping through these support levels. All right. Oh, wait, I didn't want to do that. All right, next level incoming. So we hit my first one very rapidly, didn't even bounce. Hit the second one. Now we're starting to dance around. This is an important open interest level. If this doesn't hold, I would just keep targeting the next and the next and the next. Ride the trend as much as I can. My next stop would be 6,350. 6,350 if you're playing SPX, which is about another $2 sell-off on the SPY. If you need the equivalent, that would bring us to roughly 633.5. Roughly, it's about $2. Roughly, like, and once again, this is very rough. About $10 in SPX is about $1 in SPY for just very rough crude comparison purposes. Very rough and crude comparison. Hey Matt, what's up with AT&T? No clue. I don't pay attention to AT&T or Verizon. When you have opportunities like Palantir and Nvidia and MicroStrategy and Tesla and AMD and all these tech stocks, it makes it really, really hard to care about AT&T. It makes it really, really hard to care about it. When you have Bitcoin and Ethereum and BITX, like when you have all these other things that have like such, and Hood, like it just makes me, I mean, at a certain point, you only have so much capacity to be paying attention in a day. So don't spread yourself too thin. Like it's okay to like just get like super, super focused on a small basket of things and become an expert in that. Remember, the market pays for expertise. It doesn't really pay for breadth of knowledge. It really is a mechanism of like, hey, if you're an expert in these tech stocks, an expert on this futures contract, an expert in these particular bonds, like that's where it pays. It's not necessarily paying on this idea of like, hey, I just kind of know a little bit about everything. That's not where you're going to make money in the market, in my opinion. Any news on the vomit? What do you mean? Any news on the vomit? We were talking about this a little bit in the Discord yesterday. Does no one else find it interesting or funny or questionable that when markets go up crazy, like we have been, and you can see that on the daily chart here, that no one questions it? It's almost as if it's expected. But the second we have a little bit of red off an all-time high, everyone starts to panic of like, what's happening? Folks, the market's going to cut both ways. If you're questioning like the quote unquote extreme nature of this sell-off here, you definitely should have been questioning the legit extreme nature of the pump upwards. So to be logically consistent here, you have to kind of think either both are kind of suspicious or neither of them are, and this is just how markets work. And obviously that's kind of up to you in your own opinion, in your framework of what the markets is and how they function. But I have noticed, especially in the world of retail trading, that it's almost an expectation that things are green and we go up, and that's just how the market works. And then the second there's red, everyone's like, well, what's happening? Like, why are we breaking? Blah, 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 blah. Like that type of a thing. So either they're both a little suspicious, but when I say suspicious, I don't mean like, oh, like manipulation's going on. I mean more of like, oh, it's interesting. Like, let's dive into the metrics here. And it's kind of more of like noteworthy, or they're both just like, whatever. This is how markets work. To be fair, most should have been worried how long we've gone without any real red days. That's what I'm saying. It's very interesting to me that everyone and their grandmother is currently screaming about 4 red days when there was no questions of this like explosion from April all the way till now. It's very, very interesting that people are complaining about like a stock market, bear market, doomsday crash when we literally hit an all-time high last week. Like the time proximity of it, like it really does blow my mind. It just really, really blows my mind that we could be a couple trading sessions removed from a literal record high. And then people are like, oh, fuck, dude. Fuck, what do we have going on? What do we have going on? Oh, okay. Question for anyone in here who has a Tradeify account. For anyone who used that code Goonie and you got the instant funding, do we have anyone in chat, whether on Rumble or YouTube? I do have some questions for you. Please raise your hand if you are a Tradeify sim-to-funded user who's not just using Tradeify, but specifically uses the instant funding option. Because if you're a person who identifies as that, my question for you is, which firm do you like best for instant funding? And more specifically, why? So now with the massive rise in popularity of sim to funding, there's a lot more competition, which means there's a lot of companies now being competitive in a way that they seem fit. And I'm just kind of, I guess a question for the audience is, with these types of setups, when there's so many firms and whatnot, I'm curious which one you guys think is the best for instant funding. Manipulation, no matter the move, or just along for the ride. Yeah, that's another thing I hear about in retail trading all the time, is like just manipulation. Like people love to use that word manipulation, like the stock market's manipulated. But then when I ask, like, what do you mean by manipulation? It's always just like, well, we don't know. We just hear it a lot. We hear it. Robinhood, because I can do instant money. I think sim to funded trading is way better than using Robinhood, but obviously that's my I guess my own prerogative. Matt, are you not afraid of your automated strategy code being stolen or copied? Not really, because if someone can figure out my strategy just from looking at my trades, I think that's such an impressive level of puzzle solving that they would deserve it. Like, they deserve it, and they could figure, like, I think it's a more mathematically difficult puzzle for them to re-engineer my strategy than it would be to create that strategy anyway. So at that point, they kind of deserve it. But what do you mean stolen? Like, just like, what, someone hacks my computer and then they take my code? I guess that's a risk I'm willing to take. I guess same thing. I feel like if they have the capability to hack my computer, figure out where my code is, and then steal the code and figure out how to implement it properly, that's a more difficult task than making the trading strategy in itself. So, like, I guess have at it. But in reality, a person with that particular skill set would most likely be able to come up with a better trading strategy. Grandmas are dead. Well, don't say that. We love grandmas here. We love grandmas here. Are you going to sell your strategy? No, I'm not. If enough people are interested, I wouldn't be opposed to creating a course for the Discord members, a more full-fledged course of creating your own auto trading strategies. But this idea of just like giving away a strategy, like someone just pays me $5 and now they have like hundreds of hours of my like hard work. No, I'm just not interested in it. I just don't think what people would be willing to pay is at all what I'm willing to sell it for. I think there's too much of a delta. So I have thought about it, but I think what I'm more interested in is teaching people how to like do what I do, like trying to teach it's the idea of like giving away a fish versus teaching someone how to fish. I think I'm more interested in the educational part of it, like taking a group of people and like doing like an intensive like 1 to 3 month like mentorship, like starting at like square one and just seeing how much work we could get done in that particular time frame. I think that's like, just as a human, that interests me more rather than just like saying, hey, here, sign up, give me money, and like that's it. But that's my view on it.
Target filled.
Speaking of strategies, there we go. All right, up about 620 per account and counting. Oh, and now that we're past 10 a.m., that does mean that the new strategy can start to trade, and it is nowhere close. So the only way this strategy would trade is it would have to see a massive bounce, not massive, a decent size bounce, and then that bounce fail, and it would short on the failure. So the new strategy, it's on, like, we have too linear of a sell-off for it to trade. unfortunately. Too linear of a sell-off. VIX is the only green thing. Dude, Palantir is getting fucking murked. I'm not saying that with a grin on my face intentionally. It's more like a pain grin because I have a lot of Palantir in my long-term account. So I don't even want to look at that. But I would love to add Palantir at $120. I have already sitting buy orders in my long-term investment count on Palantir at 120. And then I have another order just below 100. I think I have something at 99 and also at 120. So in the meantime, I'm writing this down and I don't want to see the daily change, but that's where I have my stuff sitting. If you know, does public API allow for accounts? I don't get the question. Public does now have an exposed API, so you can do algorithmic trading on everything that public offers because they now do have an exposed API for everyone to use. NVIDIA getting a beating. Everything's getting a beating. Look at this. The Mag 7 tried to save itself. Nope, getting crushed. The Nasdaq tried to save itself after vomiting again. Same thing with the SPY. The SPY looks horrible right now. The big guys are slight net sellers. They're not really doing much today. Not doing much. Yeah, this is getting fucked up, folks. This is a brutal one. A brutal one. So it saved itself or attempted to at my first line of support, 70, popped up, got smashed, not holding. My next level of support is down here at 350. And then I didn't draw it because I didn't think that we'd be getting past that today. I thought 350 was going to be the extreme. But just from my morning analysis, I do know that there's another open interest level at 330. And then the next key psychological level is 6,300. So this is for you guys maybe in the afternoon if things are starting to get really, really frothy out there. I'll be watching 330 and 300 if this does not hold, but I'd be expecting some sort of a bounce off of 350 here. That is quite the open interest level. Yeah, look at all these gamma levels here. 45. What the fuck are people doing down here? All right, long puts. It's a put debit spread followed by another put debit spread. Okay, so there's quite a bit of positive gamma at 6,330. So that's why I just marked this out. It's becoming a very important positive gamma zone. So in the event that 350 doesn't hold, my next target would be 330. And the reason for that is all the positive gamma. Sorry, I just sneezed. If you guys didn't catch that, my apologies. The VIX just keeps ripping. What's the VIX daily chart looking like right now? Oh, we're definitely curling up. If this thing takes out 18, things could get a little bit saucy there. Things could get a little bit saucy. All right, let's get on some tendies and tunes too. Let's get on some tendies and tunes right now. Where is the channel? Where is the channel? Okay, nope, that's the wrong channel. Oh, also, side note, for those of you who are interested in systematic algorithmic trading, I already do have free videos up. On Rumble, it's on the same channel. On YouTube, it's on the backup channel at Matt Kohrs. There's no underscores or spaces or anything like that. You can find it in the related channels, or you could just search how to use AI to beat the markets, Matt Kohrs, and it should come up. But there's already 3 videos in the series. I just filmed the 4th one yesterday, and that will be coming out this upcoming week. So once again, 100% free. You guys could check it out if you just want to kind of jumpstart your algorithmic trading career with no knowledge of coding whatsoever. Tendies. Okay, we got some lo-fi music here. Just a little something to soothe everyone's moods, if you will. A little tendies and tunes lo-fi. While we're waiting to see how bad this sell-off does or doesn't get, a question to all of you. Wait, what time is it? Oh, I don't know if Runner's gonna trade today. I really don't. I mean, we're just vomiting too hard. It would need... This is a little loud, isn't it? Is that just me? There we go. A little bit calmer. This is probably screaming in everyone's ears. My apologies for that. Looks like we're getting a bit of a... where was it? Right here. Bit of a bounce right off 23,100. So people are reacting to the key psychological level here. Some sitting buyers right at 23,100. It just led. We tapped it, led to a big spike. Obviously, it could still steamroll it through it, but I'm just explaining why. Support on the Qs. It wasn't really a random Qs level. It was actually a clear level on the NQ contract, 23,100, finding a wee bit of support, but it doesn't look like that support's necessarily going to hold for too long. What is actually this low? The low appears to be 96 or something like that. I think this low over here is 96, maybe 97.5.
Order filled.
Look at that. When it works, folks. Fuck, where are my trades? Locked it in again. We're up about, I don't know, 780 on the day. Folks, I get it. If I were you, I would be mad at me too. If I were you folks, I would be fucking... I'd be like, why does that fat Barney get everything that I want? That fat fucking Barney. My wife loves him. My kids want to hang out with him. My boyfriend's girlfriend's dog walker loves him. I get it, dude. If I were you guys, seeing a piece of shit degenerate like me achieve success every single day, it would drive me up a wall. Honestly, I'd be like, there's no God. I'd be like, this is proof that there is no God. Because if in fact there were a God, they would punish an asshole like me. I get it. I'm right there with you folks. And I don't understand it either. I can't even come up with a good explanation, because I too think I should be severely punished, but yet day in and day out, here we are. Please start that training you were talking about. I need help big time. Well, it's already up there. This is on Rumble and it's on YouTube, but if you're on YouTube, you have to go to the other channel. If you're on Rumble, it's on the same channel, but there's already a 3-part series that's 100% free right here. Video 1, video 2, video 3, and video 4 is going to be coming out this upcoming week. And if you know nothing about algorithmic trading or coding or anything, start on video 1. That's the perfect foundation going into 2, going into 3. But as much as people say they want to do this and they want to put in that effort, you guys can see right here, this is how really normal people act. They start and then they slowly but surely die off. This is 100% free information. There's no catch or gotcha or like, okay, this is what I know, but to get to the next level, there's a paywall or like something like that. Anyone who's watched these videos can attest, like, no, it's just me going through how to do it. But this is such a depiction of human nature right here. 1.5, 1.2, 500. People just lose interest. They don't have, as much as they like, quote unquote, want to pull it off and want to be that next great trader, they inherently, just the average person doesn't have that much follow through. They just don't. And so I guess that's more of a personal question of, do you want to put in the time and energy that is required to be a successful trader? If you do, and you attack it doggishly and you do nothing else, you're going to be very, very successful. If you do it haphazardly and kind of like, a little bit here, a little bit there, and you're not taking it seriously, well, congrats, but you're punching your ticket to be one of the 95% who fail at this. Like, it's just, it is what it is. Like, that's a painful thing to hear, but I don't understand it. We all understand conceptually that many things in life are very, very difficult. But when it comes to trading, people think that it's like, for some reason, going to be abnormally easy. I don't understand that concept at all. Like, if I were to tell you that, okay, I want to be a professional basketball player and I'm going to study for the next 6 months, 8 months, maybe a year, you guys would all laugh at me and they're like, you're not going to be a professional basketball player, especially in that time frame. But yet when it comes to the world of trading, people somehow think that that's then possible. Even though I would argue, to be a top tier trader, it takes as much time and dedication as it does to be a top tier professional athlete. But yet, for some reason, the way that it's shown, the way that it's discussed, the way that it's promoted in social media, we don't get that mindset. But folks, it's as difficult. It takes as much dedication. These people who make to the upper echelons of Wall Street and make millions of dollars trading, like that whole saying of like, oh, did they put in their 10,000 hours of work? Those people put in 20, 30, 40,000 hours of work. They're obsessed with it. They literally do nothing else. And then yet when it comes to trading, there's this bullshit idea that like, hey, yeah, you can like do this one thing and then you're going to be good at it and you're going to make all this money. It just doesn't work like that. I wish it did. Like, fuck, I'm the first one to admit I'm a lazy piece of shit and I wish I could make a lot of money for putting in very minimal effort. Unfortunately, it's just not how it's constructed. There's no such thing as a free lunch. There's no such thing as an easy lunch, folks. It's how it's got to go. Powell got to cut rates by now. Why? We hit an all-time high last week. I mean, if remember, the Fed's mandate is twofold: price stability and unemployment. Unemployment's low. It's in 4%, which is like, if you look at a multi-decade time frame, that's a very, very low unemployment number. We are in like the low 4%. So unemployment is not an issue right now. If we saw unemployment start to spike, that could obviously become problematic. And then with respect to price stability, we literally just hit an all-time high, and it's not like we're getting a catastrophic sell-off. Volatility is coming off a multi-month low. That's our vol reading right here. Like, we're just bouncing off literally almost like a hit. Like, maybe I could show you this better on the weekly. We're all the way down here. It's not like prices are like unstable. If you look at the S&P 500, yeah, we're coming off the all-time high. Maybe that's like freaking some people out. But I guess just to share a little bit here, we are only down 1.9% from the all-time high. So when it comes to the overall market, remember the Fed's mandate: price stability, unemployment. Quantifiably, unemployment is very low. When it comes to the world of price stability, vol is bouncing off a multi-month low, as in it's been pretty stable. And with respect to the overall market, we are 1.9% from an all-time high. If you look at what's going on with yields, like you would have to really be reaching to find price stability measurements that are like not stable. Like the onus is on you guys to try to like actually point that out. Like, where are you seeing something that's unstable? Is it in the housing market? Is it in the bond market? Is it in the equities market? Where are we seeing something that you would say is not stable? Price stability is not the price of stocks, right? It means PCE. No, it's not. There's no mandate for the Fed that is directly related to stocks. Obviously, it's something that you could look for in the world of when you're talking about price stability. But PCE is inflation. And then even that, if you look at recent PCE is the personal consumption expenditure, recent PCE readings, you're going to see that even that, like now you're talking about the stability. Is it this one? I just wanted the month over month one. PCE, I mean, we've been as low as 2.2 and as high as 2.7. So there's a delta of 0.5%, and most of them are right around this median of 2.5. So look at this from 2024 until now. That's pretty stable inflation. If you go out a little longer, you could see inflation ripped. And then this is really because of them, honestly, with all the money printing they did in 2021. They brought it back down, flat, dropped another rung, and now we're flat there. So once again, where is price not stable? I think is a pretty good question. I think that would be, I mean, I suppose you could kind of look at currency markets as well. So here's the dollar index moving a bit more, but in reality, look at most of this from 2023 upward, like little up, little down, little up, little down, a little bit more up, a little bit more down. But it's not some gigantic, crazy, like never heard of before movements. So it's still, I guess the onus is on us. Like, do I think at this point, based on the publicly declared models that we should get a 25 bips rate cut in September? Yes. I want to be clear. I should make my stance more clear. I am in no way arguing that we should be staying at 4.25. I believe personally, based on the models that are out there, such as whatever, the Taylor rule and the various other models that the Fed allegedly follows, I believe in the September meeting, we should get a 25 bips rate cut. I want to be clear. I'm in no way campaigning for the fact of, oh, no rate cuts whatsoever. That is not what I'm saying. I'm saying that if we got a 300 bips rate cut, as the president of the United States is saying we should have, that's fucking crazy. And I'm thinking by the end of the year that we should be down by 75 bips. What I believe. I mean, the models are not complex at all. Like literally, it's just plugging in numbers. Just plugging in numbers. Matt, your gigantic brain is missing the picture of the debt payment. It's not. It's not whatsoever. That has, once again, is that part of the Fed's goal is, once again, just to reiterate it, because you are not understanding it, is price stability and unemployment. It has nothing to do with making it easier for the government to pay back debt. If anything, you could argue some of its debt burden is because of the large fucking deficit that our government's running. Like this whole idea of debt payment, why is it on the person who loaned out the money and is saying this is how much you're going to pay me back? Why are they the bad guy when why not ask our government why they're spending so much money? Like, why do you have a bigger issue with the interest rates being paid on said debt versus the massive fucking deficit that our government is running up? You know how when you don't have to worry about your debt payments, when you're not running a, $2 trillion deficit? Maybe that's the other side. And like I'm not saying we should only consider one, but I'm saying you can't consider one without the other. Maybe should the Fed be playing a little bit more of ball here? And maybe, okay, give us another 25 bips. But yeah, I'm already arguing for that. I think beyond the world of our government debt repayment, that we should be at 25 bips, then 50, then 75 by the end of the year. I just want to reiterate that. But once again, it is not a part of the central banks. It is not a part of the Fed's mandate to give a fuck about the government paying back debt. That is not part of it. And even if you think it should be, like maybe if it's like an unknown thing, like whatever, a non-stated thing, I think a good question is, why is our deficit so big? I think that's interest is out of control. Why are you saying interest is out of control, and why are you not saying deficit is out of control? Folks, you don't have to worry about interest payments if you're not running up a fucking massive deficit. The interest payments, it only comes into control. Okay, here's an example. You might argue, why are Baconators so unhealthy? Man, why do Baconators have so many calories? Well, guess what? It doesn't matter if you're not already a fat fuck. It don't, like, you clogging your arteries and fucking up your system for eating a Baconator only matters if you're a fat fuck. It, like, you wouldn't yell at the burger for being like, why are you always so unhealthy? That doesn't make sense. Well, it comes into play if you're already super unhealthy and you're making the situation worse. But if you're eating a Baconator as a regular healthy person, one Baconator ain't gonna fucking kill you. It ain't gonna kill you. So I think of it always as I would in a food metaphor. Now I'm hungry. Baconators are unhealthy. When did that happen? Yeah, it shocked me too. It shocked. Can I use Snap to buy Baconators? I doubt it, but you never know in this world. You never know in this world. Matt, wasn't the last rate cut of 25 basis points at 6% inflation? And if so, why was good worth Trump suggesting? Wait, what? And if so, why was that good versus what Trump is suggesting? Jesus. All right. It looks like we're doing... What was that website I was just on? That had it, this one? No, where the fuck was that website I was just on? That had like the cumulative, is it this one? Is it this one? Is it this one? All right, I'm now losing the where was the one that showed like the cumulative inflation of where we were at? Oh, here, I just went back farther. Why did we get the cut? Because inflation went from roughly 1.1 all the way up to 7, and we started to decline, so it didn't have to be so aggressive. Okay, so imagine this. You are, what's a good fucking metaphor? I don't know if I could come up with a food metaphor. You're driving a car. You're going in the wrong direction. You realize you're going in the wrong direction, so you slam on the brakes and turn around, and you start going really, really fast because you really, really went far in the wrong direction. Well, as you start going in the right direction, you slow it down so you don't overshoot your target. So we ripped it up, realized, oh fuck, we're going in the wrong direction. And then, okay, we turn the car around, and because we're the farthest away from where we need to be, we can go very, very rapidly. But as you get closer to where you're going, you want to slow it down because you don't want to overdo it. You don't want to overshoot your target. So when you're the farthest away, let's say you're 100 miles away from where you should be, you start driving at 100 miles per hour. But as you start closing in on where you should be, you should naturally slow the car down once again so you don't overshoot it. Right now, Trump's argument for how to bring this little bit down, like we're now in the last quarter mile, and Trump is saying, hey, I know we started at 100 miles per hour and we now slowed to whatever 30 miles per hour just so we can end where we need to. He said, no. What if for this final little thing, we actually switch it up and go 400 fucking miles per hour? He wants to go faster than we ever have, up to your point of like, oh, we already got the 25 bips rate cut. The 25 bips rate cut was because percentage wise, we already made such a dent in what the inflation reading was. That's directly why. Wasn't the last rate cut of 25 bips, which was right in here, at 6% inflation? Yeah, because it was actually past 6. It depends which one you're reading. You're probably referring to CPI, which actually clocked in at 9%. I'm showing you PCE, but it was right in here when we basically made a good 30 to 50% improvement of what the inflation was. So they wanted to slow the vehicle down. That was the goal, to not overshoot it. And you can see as it's been slower and slower and slower. And right now, because we slowed down, we kind of found that rate where it allows us to like really pinpoint our exit. And that's why people like, it's such a big argument of should we get another 25 bips? But you have to understand, this is all the argument of just a 0.25%. Doing 300 bips, that's 12x what we're currently talking about. That's literally arguing to speed up the car to faster than we've ever been and trying to still like land exactly where we need to. So that is the explanation of what the fuck's going on. It's because we popped up, we made such an improvement. You can see basically right where this happened. And then from there, we've been coasting. But once again, I'm showing PCE. Remember, when people talk about inflation, generally they're either citing PCE, personal consumption expenditure, or the CPI, the consumer price index. They are two different measures of inflation. So this one spiked at 7.2, and then the CPI was actually over 9% at one point. And it looks like the market is getting ready to fucking puke again. That's crazy. That's crazy. Matt, the rate change was in October 2024, right before the election. Doesn't matter. Do you know how many, it takes multiple quarters for a rate change to be felt by the economy? Unfortunately, it's a very, very slow moving thing. That's why the Fed doesn't want to have like a clear reaction every single month, because it could take multiple quarters for the economy to feel the true ripple effects of a rate change. So this argument of like, oh, we're doing it in October just for a political thing, literally, it simply would not be measured at that moment in time. Like, it's not like by the end of October or November you would know about it. Too many excuses. What's the excuse? It's literal just math. It's just how shit works, dude. All right, some of these accounts are at 860. Some are as low as 800. All right, the lowest account is, well, 0 technically, because the new strategy didn't fire yet. But other than that, we have one at 800, and then some are up to 1,000. So it looks like slippage has about a $200 differential, a $225 differential. It looks like all the take profit accounts, all 5 of them are the lowest. But that's because this value is already accounting for commissions, and Apex, this number, the realized P&L, does not yet count for the commissions yet. So these numbers are actually all slightly lower, probably closer to these take profit numbers. But there's definitely a little bit of a slippage to have a $800 to $1,025 differential. But basically, if this trades one more time, most of these are going to be up $1,000. Up $1,000, not a bad deal. Not a bad deal. Not a bad deal. You might be wondering, why do you seem so fucking glum about it? Why do you feel like you're not, like, I don't know, excited? Folks, because I am excited. I'm happy these accounts are trending in the right way. But remember, I have a very, very long road to go before I can make money. Just because I'm up this money right now does not mean I could take that money out to my bank account. First of all, the Apex and the Take Profit, they are challenge accounts. As in, I need to run these up $9,000. These all need to say $159,000 just for me to pass the test. And then when I go from the test to the performance accounts, then I need to run it up another $12,000 to be able to take out the max payment. So am I stoked I'm up? Yes. But I'm not going to be so stoked that I can just take this $25K and put it in my bank account, because I can't. It's just going to, like, folks, for me to get to the point where I can actually start taking this money out, it's going to probably take another 4 weeks of trading, unfortunately. Well, it's not unfortunate because it gives me the time. The reason I'm running it on the evals right now is because I need to figure out all the other bugs. I mean, over the past 3 weeks, I've been publicly sharing with all of you my journey figuring out all this systematic trading and the weird bugs such as slippage and why Rhythmic is such a piece of shit. Oh, by the way, if you guys are signing up for any accounts, do not allow the data provider to be Rhythmic. It's fucking horrible. If you are brand new to this like particular world, do not use Rhythmic accounts. Go to Trade Evade accounts. I am promising you, it's going to save you a lot of headache. For those of you who have been here for the past 3 to 4 weeks, you know how much of a headache it's been. So I'm officially off of Rhythmic. So it's weird issues like that of trying to figure out some of the slippage issues, trying to figure out some of the data provider issues. Once in a while, like bugs are present in the code, trying to squash all those. Some of the code just sucks and the strategy shouldn't run anyway. So killing those, figuring out which ones I want to run. It's just a very iterative process. So I'm using it this is my overall like mindset is, if my strategy Icarus can pass the test and then get all the way to the first payout, that is quite a large chunk of data that it's proven itself on. And then I'll have more belief in the overall trading system. So inherently, I'm using out of sample data, out of sample real-time testing with all of you to kind of prove to myself if the portfolio is worth it or not, like this portfolio of strategies. So really, it getting through the test all the way to a payout is proof that I'm doing something right. And since I don't have that information yet, I don't really necessarily feel the urge to put more bills on my credit card and buy more and more accounts and just quickly get them over the finish line to run it on real-time data when I don't even know if I like it to go. I thought you only needed 3K to pass. That is true on a 50K account, but I'm trading a 150K account, so it's 3x that. 50K to 150 is 3x, so instead of a 3K profit, I have to get a 9K profit. So that's like the scaling. Generally, I was trading 50K accounts, but I was doing a little bit of statistical analysis via ChatGPT, and I think that I have a little bit more of an advantage for this particular system on a 150K account. Skip the fluoride treatment for my teeth, the one that like lowers your IQ. I like lowering my IQ. It's kind of like one of my things. The lower the IQ, the better. The lower the IQ, the better. It makes it easier to put up with the internet, if I'm being completely honest. I need to dull my senses so I don't get so angry. But we are just dying. Here's a look at the NASDAQ. That delta's not looking good, but it's also not puking anymore. Mag 7 actually went flat, and the SPY tried to recover a little bit there. And then as you can see, starting at 1026, someone just murked it. Obviously, we've had a 5-minute Orbo breakdown, a 10-minute Orbo breakdown, a 15-minute Orbo breakdown, a 30-minute Orbo breakdown, and we're not that far away from having a 60-minute initial balance Orbo breakdown. And that, for that to happen, we just need a little bit more of a puke. And actually, Piper also fired, so I should probably give that to everyone in the Discord. I should probably give that to everyone in the Discord. What time is it? Yeah, here, I'll just fire this off. It is the 20th, right? Bearish call credit spread. Yes, that is correct. Yes, that is correct. Okay. If you're in the Discord, Piper did fire. Obviously, I already did my trade. That's in thick trades. I haven't touched my swingers. Kind of doing my best to wait. Obviously, I wish I got into puts on Friday, but woulda, coulda, shoulda. Woulda, coulda, shoulda. Woulda, coulda, shoulda. He's not wrong. That's why I use Bluetooth headphones every day unapologetically. What? Oh, to lower your IQ? Yeah, hell yeah. Hell yeah, brother. 5 minute, 10 minute, 30 minute, 4 hour, all bearish, coming up to a technical support on ES at 6369. It's this low from Thursday, August the 7th. On the NASDAQ, we actually took out that low. The next support is all the way down here at 23,045. 5 minute, 10 minute, 30 minute, 4 hour, all bearish. So we're in a situation where all of momentum is bearish. On the recent daily chart, like if you go to like the 30 minute or something like that, it is also bearish. We are making clearly lower highs and lower lows. That's all these little these little triangles. Recent highs, recent lows, clearly lower highs, lower lows. So momentum and price structure are both bearish. Looking at options flow, the Mag 7 puked, now flat. That's bearish. NASDAQ puked, now flat. Actually, maybe starting to puke again. That's bearish. SPY puked, now flat. That is bearish. So what else is there? We can look at the gamma levels. Like I said, my major target where this giant gamma support is, basically I'm looking at 6,330 plus or minus a couple points in there, but that would definitely be my reach target on the day if in the event 6,350 were not to hold. Obviously this is first my target and we pretty much hit it. So we sliced through my first level like it was nothing, got to my second, reverted a bit, bear still won, and we shoved it down to the next level. And now we're at a double bottom situation. Are we going to bounce out of this and recapture 70, or are we going to puke through 50 and then go to 6,330? I should clarify, even though I think it's statistically unlikely, if 30 doesn't hold, then I'd be watching 6,300. But I do want to clarify, I believe that this target is not just a reach target. I would actually classify it as like a reach target. So this would be kind of my final point of the day. And if I were able to ride something all the way down to this particular point, I'd say sick, thank you. I would take my money and move on with my life. I don't know necessarily if I'd be pushing all the way down to that level, but hey, do you. Should I trade something on Vanquish? I keep forgetting to trade on Vanquish. Let me see how my accounts are looking over there. Let's see how my accounts are looking over there. Okay, that. Okay. 879. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Web trader. Yes, don't look at my password. That would be rude. That would be rude. 879. Okay, yes, this is the right account.
Order submitted. Order filled.
Well, that gotta fill. All right, I am in at 1180. Let's get out at 13. All right, I did get some puts right here. I already threw the order in on this. I'm doing this on Vanquish. I got 10 puts on SPX 6350. My fill was 1180. It's currently trading at just slightly green right here. I'm up about 350, $200. It's bouncing around. I have an order to get a fill a buck higher at 13 each. So as soon as this last price says 13 instead of 12, ideally I will be getting my fill, but I have a sneaky suspicion that should be happening any moment. Bada bing, bada boom. Look at that. Locked in another $1,600 right there. Dude, sometimes you just gotta love being me. 1,600. I'm a big fan right there. And then another trade fired. You probably heard that. And like I said, most of them are now above 1,000. I only have one account, well, technically two accounts below 1,000 on the day. One's at 940. Unfortunate slippage. It is what it is. And then my best account is up 1,173. Obviously, I'm trading on my 5 take profits, my 20 Apex, and I do have a new Tradeify. And if you want a Tradeify account, remember, you can go straight to funded. You don't have to do the challenge if you don't want, but obviously you could use that code Goonie to get a discount on any of these. You're going to get 30% off. Pinned to the top of chat in a also in the description of the video. Is there any questions on Tradeify while we're here, while we're chit-chatting? Any questions? Any questions? Any questions? Any questions whatsoever? Any questions? Any questions? Any questions? Any questions? 30% off code Goonie. You could also use Goonie on Take Profit Trader. You could also use it on Funding Ticks. You could also use it on Apex. How many times has this traded today, folks? Trade performance. What is today? The 20th? Can I do this in my trade? Well, that's not right. What accounts? Well, that's weird. It's not showing any accounts. Today is the 20th. Maybe it doesn't generate till the end of the day? I'm really confused. All right. I was trying to get some sort of total number to put these ones together, but maybe it doesn't update until like the conclusion of the day. If you were to restart your trading career, where would you start first? Oh, that's such a fucking good question. That's a really, 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 really good question. If I were to restart my trading career, where would I start first? Okay. Hang on one second. I can't find my copy of it, but I would start by reading a book called The Long-Term Secrets of Short-Term Trading. I would start by buying that book and reading it. How much can you buy it for right now? And you could probably find an online copy for like free. Or if you want to buy a hardcover of it, $47. But it's not something you can listen to because there's a lot of examples. There's a lot of graphs and whatnot. So I would definitely say have something that you're not listening to. You want to be able to read it, whether online with a PDF or buy the hard copy. But I would start by reading this book, The Long-Term Secrets of Short-Term Trading. And that's the benefits of this, once again, do not do audio. Do not do audio. Definitely you're going to want to be able to look at it. So that book, why I'm saying I would start there is because it's going to give you a better framework of the market. I find that when a lot of people start trading, their framework of the market is that there's some sort of ultimate model, ultimate puzzle that when solved, you make money all of the time. And it's just not how it works. It's not how it works whatsoever. It is, even with the best setups, you're gonna lose money. With the worst setups, you can make money. You have to accept that even doing the right things, you can quote unquote get the wrong results, and doing the wrong things, you can quote unquote get the right results. And I think that book really helps explain a better market framework where you understand you're just playing a game of numbers perpetually. And that's what it is. And you're betting on it working in the long term rather than on that individual trade. With that being said, I think that's a good framework. I would have avoided penny stocks. I think a lot of people, especially if they're new to the market, they don't want to take on that much risk. And so they don't want to put much capital into the market. So with that, they think, okay, well, I want to grow a little bit of capital to a lot of bit of capital. So what they end up doing is trading penny stocks just because they don't want to risk that much. But they don't realize that when you're engaging in a game where you don't want to risk that much, it's like statistically more against you than the normal market. So your odds of blowing out on penny stocks are extraordinarily high, like way higher than with other stocks. So I would have never traded penny stocks. For a little bit there, I was trading Forex. Like I think that's also a fucking sham. So I would have never done that. Basically, I would read that book. I would open a bunch of paper trading accounts and I would start trading feverishly on paper trading accounts, not risking anything. Then as I start to understand the systems and when I say the systems, I mean like the platforms and the brokerages and how to buy and how to sell, like how to do some of those mechanical things. From there, from day one, I would start working on algorithmic based mechanical systematic trading methodologies. I feel personally as if I pissed away a lot of time trying to figure out manual trading, and people just don't make good money manual trading. Most people end up losing. Remember, 95% of retail traders end up worse off than when they started. 95% of traders lose money. So if you're taking in this generic information of like fucking everyone's doing it, yeah, if you're doing something in the world of trading that everyone else is doing, it's not gonna fucking work. Like that's the math of it. 95% of retail traders end up worse off than when they started. So if you're like, but everyone says this and everyone does that, good, do the fucking opposite. Because if you're hearing these like generic things of everyone's doing it on Twitter, everyone's doing it on YouTube, there's no better sign of like run the fucking opposite way. And what I was always being taught or somehow pitched or sold a course for, this, that, or the other thing, is that type of bullshit. It was always some fuckface hanging out with his MacBook, hanging on a Lambo of like, I was fucking poor like you, and then I figured out this system, and now I trade it all the time, and I trade 1 minute a day, and I make millions of dollars, and if you buy my $10,000 trend line course, you could be fucking rich like me. It's bullshit. And if that's what you think trading's gonna be, you might as well not start trading. And like, I know this is a harsh thing, but honestly, most people shouldn't be traders. Like literally, I'm probably one of the few people who's gonna say this because like my livelihood is somewhat based on the fact that you guys watch these videos and want to be traders and join the Discord and use the services that I pitch to you. But I also don't want to be a fucking scumbag liar. Most people should not trade. Literally by the fact of 95% of people are worse off. Like straight to the fucking point, many of you listening to me right now should not be traders. It sucks. It sucks to say, but that's the reality of the world. You have to do everything in your power to attempt to be that other 5%, and to be the other 5%. I think the most efficient, realistic way for you to be in that small upper echelon of people is to attack the markets in a very mathematically defined manner of, okay, I have these ideas. Here's my entry criteria. Here's my exit criteria. I'm going to back test it. I'm going to see how it ran historically. And you do that. You're going to find 99 strategies that don't work. But you do that because every so often you find that diamond in the rough, and it's that 100 strategy that you're like, holy fuck, it's profitable. It's net profitable historically. Well, let's test it on some out of sample data. You test it real-time data on those paper accounts. You're like, shit, it's still performing the way it did historically. And then that's when you decide to put some capital behind it. So I just don't think enough people take it seriously, I suppose, is like my biggest from the vantage point that I have dealing with literally hundreds of thousands of retail traders and in the game of live streaming and content and interacting people on the interwebs and in real life, I think the biggest thing is people underestimate the seriousness of which you have to approach this game and even the proper way to approach it. So even if you're that person, you're like, no, like I'm committed to this and I want to be that level of a trader. That's awesome. But make sure you're not just doing dumb fucking things. Like what's the thing I see right now all over the internet? ICT concepts or smart money trading, whatever those fucking, dude, they're all blowholes. I can tell you this because when have you ever seen any of those guys prove their success? When have they ever won a trading competition? When have they ever been on any trading, like whenever they ever shown, I don't know, their brokerage statements? Like they all make money from having social media presences, like a social media presence in a general sense. They make way more off of that than they do their own trading. In fact, they probably lose money trading and they just pay that they like are only taking enough of a loss that their other income, that they're still like cash flow ahead. I think what you need to do is approach it way more seriously than you could ever possibly imagine and approach it in a mathematically driven manner. If you are just sitting there like guessing of like, no, that looks like a fucking high and this other guy said it was a high and we're going to come, like, what the fuck does that mean? It's math. This is a game of math and that's how you win. Whether it's the best retail traders or the best people on Wall Street, the one thing they all have in common is all they are doing is looking for mathematical edges in the market, and then they move on with their life. That's it. Well, let's get serious. How does everyone feel about a call on SPY? Literally, are you fucking with me? I pray you're fucking with me. Out of my entire fucking diatribe of like attacking this game seriously with math, like supporting your decisions, you're now just saying, how do you feel about calls on SPY? Are you so fucking dense that you don't you don't understand, you don't realize, you don't respect the fact it doesn't fucking matter how you feel or how anyone feels? Like, are you really that fucking dumb? Dude, and this is like, I don't know, some of it's heartbreaking because I see dumb comments like this that I'm like, oh, that guy's going to blow out and you're going to lose your money. And I feel bad for you and I feel bad for your family and I feel bad for the time that you're wasting. And this game is a clock. It's a clock of the race between how quickly can you approach the game properly versus how quickly are you blowing out your money when you're not approaching it properly. This idea of like, oh, I'm feeling like, shut the fuck up. Shut up. Oh, how do I feel about this? How do I feel? Ew, I feel good. I feel bad. I feel like this is going to be it. Like, bro, shut up. How do you feel about calls on AMC? Well, that's a different problem. That's a guarantee. Matt, did you see a study on coin flips not being 50-50? They flipped 350,000 coins and found that a +2 bias towards landing on the side that it was flipped. I thought of you immediately. I haven't seen that. Time in the game beats timing the game. That's only true for investing. That has nothing to do with trading. That's another thing that I see is too many people conflate trading and investing, and they are wildly different games. I see why people do conflate them because of they're just both executed on the market and they seemingly have similarities, but they could not be any different. So that saying right there, while true, has nothing to do with this whatsoever. Trading and investing are two completely different animals, two completely different beasts. And if you are saying them in the same sentence, you're already massively behind. Investing is one thing and it's great and you can make a lot of money off of it. And look at someone like Warren Buffett, long-term investor, made a shitload of money. But once again, that is wildly different than something like Renaissance Technologies, which doesn't even hold a position for more than like 1 or 2 weeks. Like, they don't give a fuck about fundamentals or anything like that. It's just two completely different things. And I see a lot of people conflating them. And you just, I don't know, to save yourself money, just stop. Just don't do that. Have you read The Principles of Economics by Carl Munger? No, I have not. I actually find long-term investing to be like incredibly simple. You just pick a particular popular thematic field that you think is going to be more popular in a decade or two, and you get large exposure to the overall market and you move on with your life. Long-term investing is really not difficult. You can make it as simple as buying the SPY and the NASDAQ and a little bit of Bitcoin and a little bit of gold and move on with your life. And statistically, when you come back in 10, 20, 30 years, you're probably going to be up, depending on your time frame. You should 8x your money every 10 years is the general growth of the S&P 500. So if you should be able to basically 16x your money, not counting for other compound growth in there, if you as in adding more money to your initial base. But in about 2 decades, you should 16x your money, and that's going to be the generic growth of the S&P 500. It's not a difficult thing. Pick the market, move on with your life, and just go on. But that's investing, which like is so like it honestly shouldn't be said in the same sentence as trading, beyond the fact of saying that they are not the same thing. So did the Fed cut rates? Just woke up. No. Today's not even close to the day that they would. The next meeting's in September. You're like a month away. Real estate is a good long-term way to make money too. It does underperform the S&P 500 though. In the recent decades, I forget what study I saw. It was either from the 70s to now or until the 80s to now. If you took the same amount of money, and even accounting for the tax advantage nature of real estate, you would outperform in the S&P 500 and also not have the headache of having to deal with real estate or like tenants or something like that. But like just the pure math of generic USA real estate growth has underperformed the S&P 500. But the caveat there is there's certain regions that have outperformed the S&P 500. So it's not a purely fair statement. Certain real estate regions have outperformed. So you can't say that is 100% true across the board. It is regionally dependent, but if you took the average growth of real estate, it has not beaten the S&P 500 in the past either 4 or 5 decades. I forget which one this was the starting point was. Have you ever been called to exercise an option? When does that happen? Sorry, I'm new. Yes, I have. And it's, it depends if you're the buyer, the seller, or the premium. If you're the buyer, you have the option to exercise it if you want. If you're the seller premium, yeah, it can get exercised. And basically, you're either giving up the cash and you're giving up the shares, or you're executing a different option that maybe you have for protection so you don't have to do it. But it happens when... Well, you could choose to exercise it when you want, and then thus the opposite's also true. If you're selling premium, that person can choose to exercise it when they want, but it's somewhat of a rarity. But also, if you don't know what it is, you should look into that before engaging in options. I don't know if you have a live one right now, but you don't want to get yourself into a very confusing situation that could cost you a lot of money just because you don't understand it, when in reality it might happen. But if you have a better understanding of the situation, you can handle it properly, and then you might end up making money. Historically, there have been some people in the Discord who didn't understand it, and they sold premium, and it was a credit spread, and it was a huge mess, and then they were on the hook for a shitload of money, and in reality they had the protection leg, and there was nothing to sweat about. Total noob here using ICT strategies. Just want your insight. I understand that it's not your strategy. Yeah, it's not my strategy for a reason. It's because that guy's a fucking retard who does not make money. Chris, you're new. So this is a good thought for all of us, a good brain, a brain teaser here. Why would you ever use the strategy of a person who has never been profitable? First question. A person who have never fucking played basketball, would you take basketball tips from me? Ever? Let's just think about this logically. Someone who is proven to have no success in this world, has never had a yearly or quarterly brokerage statement saying he is net ahead, has never won a trading competition ever, and has actually been caught doctoring previous brokerage statements to make it look like he was profitable, and then he got like exposed for that. So inherently, if you have that person who is not only not shown success, but is actually shown to be actively bad at it, that's who you want to learn from? Like, why? Like, I don't understand it. Like, do you really think it's just going to be that simple that some fucking retard who has never been successful is going to be the person that teaches you? Because I was under the impression he was, from his own mouth. Like, who in the world ever told you? All right, well, I wasn't planning on doing this, but when in Rome, Iman trading ICT exposed. When in Rome, fuck, this is so long. How long is this video? That one's 10 minutes. Wait, 1 year ago, 1 year ago. Which one's more popular? This took 3 months. Okay, maybe we'll do this one. It's only, oh wait, no, there's 6 months. Oh, fuck, that's such a goddamn long video. Is this a 10-minute video? You'll get the point, but the guy's a fucking scumbag. Maybe this one will be appropriate, but when you have time, I would say watch the 42-minute one. Oh, and by the way, before I get into this video is by Iman Trading, I-M-A-N Trading. I highly recommend you guys all follow this channel. Makes amazing videos exposing all the scumbags that deserve to be exposed. But once again, not my video. Highly recommend you follow this channel. It is a phenomenal channel. Phenomenal channel.
Higher generally.
My personal trading is
here.
And it just so happens that my strike rate generally is around 90%.
Is it 90% or is it higher generally?
In my personal trading is 96%.
8 years after ICT's humiliating 6-month 97% loss and multiple failed Robbins Cup attempts, only uploading wins on Twitter tricked the fraud into believing his own lies, which led to a catastrophic 2-day rise and fall of one of his first real trading live streams ever. But what happened after is the real story.
You don't think they're watching me? You have seen me do things with trades, with accounts, and I've called.
Oh wait, I wanted to rewind. Like this guy, like it's not just bad,
Trades.
it's horrifically bad. This week down 85%. Overall gain, a loss of 97%. His average trade was losing $6,000. That was the average trade. And you're like, that's who I gotta follow.
With accounts, and I've called things on Twitter live minute by minute. And you're going to get a taste of that here visually. Folks, I would have paid money for someone to teach me what I'm going to show you today, and you're getting it for free.
After going $95 into profit, his first trade fell to the $300 stop loss.
Oh, he took a loss.
Trade number 2 briefly looked good before the $200 loss, which is all it took to get a sample of what would come later.
There you go. I'm sitting here thinking, how many of you are putting stop loss there? And the 15,000 are watching. Oh, that's 15,000 stop losses right there. Let's run right to that.
And for the final trade of the day, an immediate reversal would make it 3 losses in a row and a total of minus $740.
Some of you might be thinking, well, why did you take 3 stop outs today, ICT? I mean, you're supposed to be Mr. This and Mr. That. Well, I am Mr. This and That. Okay.
Now for day 2. Surely it goes better with no excuses, right?
Look at that. You guys are following my stops. If I place my stop publicly, and people are going to be following me in a large degree, that's creating and engineering liquidity. There's your stop. You don't think these markets are rigged?
And so after a string of losses, ICT made the smart and professional decision of tripling the trading size from 1 to 3 contracts, just like all good traders do. This time going $75 into profit
trading.
right before, you guessed it, falling to the $450 stop loss, demonstrating the precision ICT always talks about as long as you do the opposite of him, since that loss was 6 times bigger than the maximum unrealized profit. And so, ladies and gentlemen, after 5 losses in a row and losing over $1,500, when we needed him most, your mentor's mentor, the Wrecking Ball, the ghost in the machine, Michael J. Huddleston, took a trade and won $75. So, 6 trades total, 5 losses in a row, and the only winning trade
That's-
was less than
Statistically, that's impressive to lose 5 in a row. Like, with every trade being most of the time like 50-50 normally distributed, the chance of not getting a winning trade, 50%, 25, 12.5, 6.25, 3%. There was a 3% chance. Not like, I think you guys really need to understand this. This guy is impressive, but in a way, that's the exact opposite of what you should be. This run right here, there was a 3% chance of that happening, and he hit it. 3% chance of that happening. And how fucking, like, this guy isn't, like, literally you could pick a random person off the street who knows nothing about trading, and they would probably beat this mentor's mentor, who there was a 3% chance of that. That's fucking, he's statistically horrible at trading.
half the size of the smallest losing trade. But I do not like math, except for right now, to see the odds of losing 5 trades in a row with a 96% win rate.
Oh, yeah.
But
And
forget
I gave him a 50-50 chance. He says he hits 96% of the time, so it's obviously even worse.
96%. Even with a 60% win rate, losing 5 in a row is a 1% chance,
that's it.
which isn't exactly in line with claiming to have the holy grail, to be the creator of the algorithm that controls price action. No, listen to me. The inventor of the algorithm that controls price action, and to always be yapping about precision and how great he
This
is at
guy's
trading
such a
while
fucking
saying stuff
twat.
like this.
Nothing out there is better than what my concepts do. There's nothing better than precise.
That edit. ICT's precision.
Better than what my concepts do. There's nothing better.
I forgot about that. That's probably one of the best edits I've seen.
Better than precise. I'm just saying my stuff is superior to everybody else's. Go back and look through your charts and you will see what I just said is algorithmically proven to you. It goes on every single week. It happens this way all the time. It does it all the time. It's flawless. It never fails. It's always in the charts. You can set your life around it as a model.
So, as you already saw, the first day ended after losing all 3 trades for a total of minus 37 points. So it might confuse you to hear ICT say the following.
There you go. $885.55 profitable day.
This will be shocking, but what you're about to see could indicate that there is a small part of him that is in touch with reality. Somewhere next to saying he trades poorly to prevent his broker from copying his trades is a small
I love it. This is my favorite excuse ever. And in the future, when you guys see me losing money, I'm going to use this excuse. I thought about that in the early going on, and when I run up an account a day or so, I send it into a drawdown or put on positions that are meaningless in the off chance that this was to happen. Do I believe it does happen or no? No, I don't. I would have been made them uncomfortable and trusting doing so and then account. Sometimes I drop a new account initially to cause doubts if it is on my mind. Same. 900 people agreed with this. They're like, fuck yeah, dude. I too. Whenever you guys see me take a losing trade, it's not because it's actually a losing trade. It's because I'm throwing my brokerage off because I don't want them to copy me. So I just need that. I also have a 100% hit rate strategy, obviously. And I just need you to know that if you ever see me take a loss, it's because I'm trying to trick the brokerages. So never, ever accuse me of having a losing trade. It's just a trade to throw off my brokerages because I can't have them copying me because I, too, created the algorithm that runs the market. Fucking 1,000 people in this world were stupid enough to believe this. 1,000 fucking people.
small piece of him that knows he can't trade. And that's why he didn't start the stream until he got a huge winner on a brand new reset sim account just minutes before going live. That is why the fraudster had the delusional balls to claim profitability on a day where he very clearly lost every trade and was not profitable.
He's so
if he
good.
had traded 10 contracts
so
during the
good.
stream like he did before starting, which was obviously done to build up a cushion in case he traded poorly, then the day's total return of minus 37 points would have been a loss of over $7,500. However, most people know that 1 + 1 = 2, so describing this absurdity isn't needed for those with baseline critical thinking skills. Well, maybe one more time. ICT lost every trade, yet claimed profitability because of a random trade on 10 times bigger trading size on a reset sim account taken minutes before the stream started, which he
Nice.
did in case he traded poorly on stream. And if he traded well, he would have said, now imagine that on 10 contracts contracts instead of 1? Well, luckily for us, we don't have to imagine. If you traded 10 instead of 1, you'd lose 10 times as much as usual. Please help me, I'm losing it. Spent 60 hours on this bid and another hour on this bid. And so after the second and final live stream ended, he took to social media to reflect on his trading performance. Not to say that he traded poorly and that's just how it is sometimes, and certainly not to admit that this is how he actually trades. No. He chose to say he learned that his public stop loss is a bullseye. For anyone lucky enough to not know what stop loss hunting is, telling beginners that someone or something manipulates the market to make you fail is what gurus say to grab the attention of unskilled traders. Luckily for these traders, the gurus just so happen to know exactly how it's manipulated and are willing to teach you. Nice! And all you've got to do to get this information is pay a one-time fee of $200 plus $150 a month for a few years.
See that? Aren't you glad you paid for this with PayPal? Best money you ever spent.
Because I've done all these same things, okay? And yes, I made a lot of money taking other people's money from them on a month basis. I did that, okay? I did it. But I make far more money trading and profiting from that. If you were to ask me, and I have been asked this, have I made more money teaching, okay? And have I made more money teaching in mentorship than I have in live trading? And the answer is yes. I've made millions, millions, and millions, and millions more teaching mentorship. Because if you can do what I've taught, you don't need to run your own mentorships.
Anyways, when ICT loses 5 times in a row on a sim account, it's someone else's fault. But if you get stopped out on a trade, then it's your fault.
If you got stopped out in futures, you placed your stop in the wrong place, period. That's the truth, folks.
Dude, that's a great piece of advice there. If you get stopped out trading, it's because you put your stop in the wrong place. If you never use the stop, you can never get stopped out. I'm giving away this for free. I could help you never get stopped out ever. If you never, ever, ever want to get stopped out again, all you have to do is never use a stop. Dude, fucking genius. Take my money.
That is the truth.
But the insanity and delusions don't end there. Even the stop-loss hunting believers who would be profitable by just doing the opposite of themselves if stop hunting was as real as people think, will agree with the following. This picture with the candle's wick just barely poking through the top of support, a supply zone, Jonathan, or whatever else you want to call it, is often referred to as stop hunting. The concept, whether valid or not, is typically characterized by price action just barely poking through something before reversing. Yet here's one of ICT's trades that supposedly got stop hunted. Don't you just hate it when you get stop loss hunted by your own algorithm? Don't you hate it when you get stop hunted and price goes 30 points past your stop loss? Oh man, I hate when I get stop hunted by my own game.
It's interesting, isn't it? I can call all the candles as long as my stop is not placed in there. As soon as I make a public stop, it'll go right to the stop. And all they're doing is proving everything I've already told you. They don't care about the calls being mentioned. They don't say, oh, let's go after that move because he's mentioned it. But if I put a stop there, you're all following that stop loss, and that creates an engineer's liquidity. It doesn't negate a trading methodology. It just proves the methodology that it's going to go to where the largest pool of liquidity is, the easiest path of least of resistance. It's going to jump right there where that liquidity is. And sitting out here in a live stream, it literally puts a bullseye on it. And it's proven because listen to what I was doing at the opening range today and what I was looking at yesterday. When there was no execution, zero. I knew exactly what it was reaching for. It was explained.
To make this even better, listen to this specific part again.
If you got stopped out in futures, you placed your stop in the wrong place, period.
In ICT's
Fuck
head,
yeah.
whoa, scary place to be, let's get through this quickly, his performance is his viewers' fault for copying his sim account trades mostly on their sim accounts and prop firm valuations, which are also sim accounts, and maybe even a couple of them on funded prop firm accounts, which are also mostly sim accounts, and maybe 100 people put a stop loss there on real accounts. Which is nothing when you realize over 700,000 contracts were traded on a centralized exchange and that futures brokers don't set prices or bid-ask spreads. So again, it's someone else's fault when ICT loses, but it's your fault if you do. At the same time, ICT supposedly lost because his algorithm moved price to take out these stop losses. And yet listen to this.
It doesn't know. Listen to me. Okay, this is very important. The algorithm does not know how many orders are above or below any specific level.
I know that ICT's hypocrisy, nonsense, lies, delusions, and lack of logic can be a lot to handle, and most of you are getting permanent brain damage from watching this video.
I am.
Don't look away, son. You don't need to move the stop. Just let it go. Don't worry. It'll go. Just relax. You don't need to do anything. The limit order will do everything for you. Okay, keep watching it. It'll go. Just relax. No, you don't need to don't take anything off. Just let it go. It'll be a full pull.
There is practically an infinite number of insane audio clips and tweets to bring up while referring to this 2-day live streaming rise and fall, and the fact that he lost 5 trades in a row with a self-proclaimed 96% win rate. But this video here, which will be in the pinned comment, is a 30-year history of his fraud, failed trading account.
Yeah, so you do have to watch the longer one to understand all the times he's been like legit caught like doctoring his statements and stuff and reasonings for blowing out. Like, it's fucking nuts. It's crazy.
How he's fooled millions of people and created a cult, and so much more, including proof that his concepts don't work any better than using a cat's meows as an indicator. Go see for yourself why for the first time in ICT's trading career, he didn't bring any attention to something that made him look bad. And remember above all else that if ICT wins the 2024 Robbins Cup or finally trades correctly after the date of this video release, it will be the first time in over 30 years that he's traded well. And if you think events in the future can undo events from the past, then you and ICT are a perfect match. As for me, I'm funded, but just like ICT, not consistently profitable yet, except...
There you have it. Like I said, subscribe to Iman Trading. Great video. Just wrecking the guy. So anyway, back to your initial question, Chris, of do I use this concept? No, because I don't want to lose money. I also don't want to necessarily be trading a system that is guaranteed to lose me money. The guy is delusional. His followers, it's a cult-esque thing. He goes on a multi-hour rant that's like very biblically related, and he argues that you have to watch all these videos, and he like intentionally interjects secrets about the algorithm that he created that runs the entire market, even though he's never been profitable, yet he made the system that runs the market. After watching that video, if you are trading any ICT concept after watching that video, you legitimately deserve to lose the money you're going to lose. Like, you honestly, as a human being, like, cannot be so stupid to trade concepts that are quantifiably made by a fucking retard that the odds are you will lose. Like, it drives me up a wall that people fall for it, and yet people like, he does have a large following, which is probably why you're like, oh, like I came across it, and like all of his fucking sycophants will buffalo you into believing that he is profitable and it's the way to trade, and yet there's not a single ICT trader who's actually making money. So when you are taking millions and millions and millions of dollars from students, as in there's a lot of students, when not even one of them is successful, maybe it's just not a good trading system. Maybe they're like, maybe that's just a fucking crazy concept, but I have a sneaky suspicion if you've taught that many people and none of them are making money. Yeah, and also that's a good point. Someone's like, he didn't even make it. Yeah, he actually ripped off from Larry Williams and Wyckoff. Like, he didn't even come up with this himself, the shit that he did. Like, the somewhat useful things he says are literally just stolen from other people. It's crazy. It's absolutely crazy. And the TLDR is, don't fall for it. Absolutely do not fall for it. There are great people to learn from, and if you're going to learn from anyone, you should basically at minimum demand that they have proof of some sort of successful track record, whether it's for a month, a quarter, a year, brokerage statements, real-time trades. Ask for some form of proof before you give anyone your hard-earned money. That is the TLDR, is don't take all this Monday morning quarterbacking bullshit, or even worse than that, just nothing in general, just like fucking ramblings of a madman. It's just, you're going to lose your money. Like, honestly, straight up, you're going to lose your money. That's what I have for you. We're over a little bit today, but I think that video was pretty fun to watch in all reality. So ending actually on a pretty good note here. I sold some premium. That's up right now, but it's not closed out. Speaking of trying to trade, you guys saw all these trades in real time. I've made $1,000 per account on 25 accounts, so up a little over 25K on the day. Slowly but surely going to where I need to be. One step closer to being able to take money out. And then I also traded on here. I made another 1,600 there. So, I guess I would beg that anyone else who is attempting to be whatever, a teacher, an influencer, I think the entire industry should be held to this standard of either doing it live or showing proof of trades. I know some people don't want to be on camera and whatnot, but once again, if you're going to be, I guess, taking other people's money or trying to teach or something like that, at least some sort of verifiable track record, I think is the absolute bare fucking minimum. But like I said, those are just my own hot takes on the situation. That's what I have for you. If you want a Tradeify account, don't forget to use that word Goonie. That code will work on pretty much all of them. Tradeify, Apex, Take Profit Trader. Those are all the ones that I use. Other than that, we'll be posting an update video later on today. I'll be hanging out in the Discord, and then we're going to be streaming once again tomorrow morning, 9 a.m. bright and early. I hope to see you there. Peace.